This is brought to you by John Daniel and Partners, LLP.
Good morning. My name is Frida Babu. I work in John Daniel and Partners, LLP. Welcome to today's webinar. We are going to talk about taxation of SACCOs. It's good to have you all on board today. Maybe before we start, we can start with introductions. Feel free to unmute and introduce yourself and maybe the sector that you are in and your expectations for today's webinar. I'll give us 5 minutes for the introduction. If you're not comfortable unmuting, you can drop a comment in the chat section area. You introduce yourself, the industry or the kind of business you run, whether you work in a SACCO or you're just interested to know about taxation of SACCOs. Yeah, feel free. Thank you. We have a comment from Alice. Thank you, Alice Mangi. She says she works for an accounting firm known as FHC East Africa. Thank you for joining in. We have another comment from Anne Wezesha. She's a legal and tax consultant, and she's glad to learn more about taxation of SACCOs. Thank you so much, Anne. Okay, we have another comment from Kimani Ngecha. He works with Lantana, a financial strategy firm. Thank you so much, Kimani, for joining in. Okay, I think we can close that session and go straight to our presentation. Okay, now we have another comment from Kennedy Waigoro. It says, is from KenK Bookkeeping and Consultancy. He's an accountant and happy to hear and learn more on taxation of SACCOs. Welcome, Kennedy. So we go straight to, we have another comment from Beatrice. Beatrice works at ValueMax Consulting Limited. They deal with ISO implementation and certification for standards. We have Esther Jogona, an ex-KPMG tax advisor currently in the oil and gas industry and interested in one and always great to learn. Welcome, welcome Esther. Thank you so much. At this juncture, I take this opportunity to welcome you all and thank you for taking time to join our webinar. We normally have these webinars on monthly basis and the webinars are free. We are John Daniel and Partners LLP, a CPA firm based in Nairobi. We are in Nana House. Nana House is in Kimathi Street, opposite Nation Center. And my name is Frida Babu. I'll be your host for today. And the topic for today is a very interesting topic, taxation of SACCOs. I want to assume we have interacted, everyone here has interacted with SACCOs in one way or another. Either maybe you work for a SACCO or you are in a SACCO, you save there. So feel free to raise any question that you may be having in the chat section area. Once the presentation has begun, please mute so that you can have a smooth learning session. Our presenter for today is CPA Beatrice Wangoi. She is a tax consultant here at John Daniel and Partners, and she's ready to teach us. Let us be open to learning. Thank you so much. Welcome, Beatrice, if you can hear me.
Hi, Frida. Please confirm that you can hear me.
Yes.
Good morning, everyone. My name is Beatrice Wangui, an accountant here at John Daniel and Partners LLP, and I wish to welcome you once again to this webinar as we discuss the various tax aspects of SACCOs. In case of any questions, please list them under the chat box and my colleague John will be answering them in the course of this meeting. I'm going to switch off my camera for connectivity purposes so that we can have a good flow of communication during this discussion. Frida, please confirm that you can see my screen.
Yes, Beatrice.
So for today's content, we are going to have an introduction whereby we'll be talking on the organization type under which SACCOs operate under, that is the cooperative society. Next will be on the types and structures of cooperative society. And then the legal framework governing SACCOs, that is the bodies and the laws that govern SACCOs. And then the section on the taxes applicable to SACCOs. And finally, we are going to have the conclusion bit. So we will begin by understanding the foundation of SACCOs. And a SACCO is a type of cooperative society. And what we mean by that is that legally and by structure, a SACCO is a cooperative society movement. And by definition, a cooperative society is a member-owned organization that is formed to meet a shared goal. This goal can be an economic goal, for example, through savings and lending, or even when cooperative societies or people come together to form a cooperative society to help them in marketing their products. The other reason can be the social goal. This can be people coming together to allow them educate themselves and also help in community development. The other purpose can also be the cultural purposes. And these are the common goals that we find people coming together to form a cooperative society to achieve. So what happens in cooperative societies is that people come together, they pool their resources together and support each other. And this can be, for example, through savings, especially for SACCOs. Then we have the marketing and also the housing, whereby we find that we have specific cooperative societies that are formed for the sole purpose of providing residential houses to its members. Now, cooperative societies in Kenya operate under 7 core principles. We are going to go through each one of them and see what it demands of the cooperative societies. Number 1, we have the voluntary membership, whereby for you to be a member of a cooperative society, it must be a personal decision. And you must choose to be there, and you're not forced to be a member of that cooperative society. The other principle is on the democratic control, whereby members of a cooperative societies are supposed to be the decision makers, and each member has 1 vote, meaning that each member has a role to participate in each and every decision that is being made in that cooperative society. The other principle is the member economic participation, whereby members contribute capital in that cooperative society. For example, in a SACCO, whereby you contribute deposits, and then at the end of the year or a certain given period of time, the profit is shared among the members of that cooperative society. The other principle is on the independence, whereby all the cooperative societies operate independently, and only the members have a say in that society, and no other external party can intervene. The other principle is on the education and training, whereby we find that most cooperative societies aim to educate and train their members on how they can enhance the success of that cooperative societies, be it in our community, whereby we find people coming together to enhance or improve their economical status through the benefits that they gain from these cooperative societies. So in the process, you find that these cooperative societies will train their members on how they can benefit themselves and also benefit the society. The other principle is on the cooperation among cooperatives. This is whereby we find that cooperative societies come together, or we can say that members come together with the aim of helping each other improve their well-being, be it economically, socially, or by culture. The last principle is the concern for the community, whereby we find that cooperative societies are formed for the main aim of enhancing or promoting the economical, the social, and the environmental well-being of the society. So these are the 7 core principles that all cooperative societies operate under. With that said, now, cooperative societies are usually governed by the Cooperative Societies Act, CAP 490, just the same way we have the Companies Act that governs all companies in Kenya. Now, once a cooperative society becomes registered under the Cooperative Societies Act, it becomes a distinct legal identity, whereby you find that there is a separate identity of its members and it as a corporate body. What this means is that now that cooperative society can own its own property in its own name. It can also sue or be sued, or it can also enter into contracts with other parties and not involve its members. So on this section, we are going to see the different types of cooperative societies. And to begin with, we have seen that a SACCO is a type of cooperative society. So that will be our number 1, the savings and credit cooperative societies. So with SACCOs, what happens is that they mobilize savings from members and then provide loans at affordable rates. I know most of us are in SACCOs and might have a clue of what happens with SACCOs. So ideally, members contribute deposits and share capital, and then in return, you are given either a loan, and also at the end of the year, you also receive a dividend from the share of profit that the SACCO has made. So members of these SACCOs are mainly people with a common bond. It can be an employee, the employees that come together to form a SACCO, like the way we have the teachers SACCOs, or even accountants SACCOs. We also have, it can also be a community or even profession, like Muhasibu SACCO, which mainly constitutes of accountants. The other type of cooperative society is the consumers' cooperative societies. So with these cooperative societies, they are formed to help the general consumer access consumer goods at reasonable price. And what happens with these cooperative societies is that they buy goods in bulk and then sell that is directly from the producer or the wholesaler, and thereby eliminate the middlemen in the process of the distribution. So you'll find that the consumers are able to access consumer goods at very low prices compared to having the middlemen selling to the consumers. The next type of cooperative society is the housing cooperative society. So these are the cooperative societies formed to provide residential houses to their members. And what happens with these cooperative societies is that you find that they buy land, they develop it, and even go ahead and construct houses, and then give its members once the houses are completed. Or in some cases, you find that they offer their members the loan at low interest rates, and then the members can construct their own houses. The other type of cooperative society is the producer cooperative society. And with these societies, they are formed to protect the interests of small producers by making available items of their needs for production, like the raw material, the tools, the equipment, the machinery, or even market their products. So what they do is that they make life easier for the producers to either access the markets, access the raw material, the tools, or even the machinery. The last type of cooperative society is the agriculture/farmers cooperative societies. These are formed by small-scale farmers to work jointly in the marketing their produce, and they thereby enjoy the benefit of large-scale farming. A good example of this could be the Kenya Planters Cooperative Union, the KPCU, that mainly deals with the coffee and tea planters. Now, to the next section on the structure of cooperative societies. This is more of a pyramid-like structure. And the topmost usually have the apex societies, and then below it is the union or the secondary societies, and below it is the primary societies. So the apex is the topmost structure of the cooperative societies, and it is usually made up of the secondary union societies. And this society serves as the lead organization for all other societies. The one that is currently under lead for all the societies in Kenya, it's the Cooperative Alliance of Kenya, that is the CAK. Next is the union or the secondary society. These are the societies that are solely made up of the primary cooperative societies. A good example would be Cusco, and that is under the union of the secondary societies. The other structure of cooperative society is the primary societies, including SACCOs. So these are the foundational level that deal directly with the individuals in areas like savings, credit, farming, or housing. So one thing you'll note with the primary societies is they only deal with the individuals, while the apex and the union deal with other types of societies. So like you'll find that the apex has the union, which is the second layer of the structure of cooperative societies, and then the union or the secondary will have the primary societies. And to our next section on the legal framework of SACCOs. What I want us to understand in this section is the two regulators of SACCOs in Kenya. We only have two, that is SASRA and the Commissioner for Cooperative. But that SASRA is the SACCO Societies Regulatory Authority. And for SASRA, they regulate two types of SACCOs. One is the deposit-taking SACCOs. And when we talk of deposit-taking SACCOs, these are SACCOs that accept deposits and also allow you to withdraw the money at any time. And when we talk of the non-depositing SACCOs, these are SACCOs that do not accept you to deposit money and withdraw at any point in time that you wish to have the money. So with SASRA, they regulate the deposit-taking SACCOs. And then at the beginning of January 2021, they also took in the non-depositing SACCOs the non-depositing, sorry for that. So as I was saying, at the beginning of January 2021, SASRA also took in the non-depositing SACCOs who have a capital of above 100 million. So the other regulator is the Commissioner for Cooperative, and the Commissioner usually regulates all other non-depositing SACCOs that are not under category for the SASRA. Under this section on the governing laws, we are going to understand the various laws that govern SACCOs. We have seen that we have now the regulators as SASRA and the Commissioner for Cooperatives. And in this section, we are going to understand the laws that govern how SACCOs operate in Kenya. Number one is the Cooperative Societies Act Cap 490. As we had seen at the beginning of this discussion, all cooperative societies must register under the Cooperative Societies Act. And what this act does is that it governs the registration, how cooperative societies are managed, and the regulation of all cooperative societies, including the SACCOs. So the person in charge of administering this is the Commissioner for Cooperatives. The other law is the SACCO Societies Act 208. This is the one that established the SASRA in 208. And what it does is that it provides details on how SACCOs are supposed to be licensed, regulated, and even supervises how SASRA does its work. With this act, it also provides details on the capital adequacy of the SACCOs. That is the amount of capital that a SACCO should maintain for it to run in Kenya. And then we have governance issues and also how they report their financial performance. The other law is on the SASRA regulations and guidelines. So with this, it provides the regulatory framework for SACCOs to ensure that SACCOs members' money is safe in the hands of the SACCOs. So this covers the risk management on the money that is deposited with SACCOs. It also details on the ICT standards, that is how secure the systems that SACCOs are using should be. Then it also covers on the consumer's protection, whereby it details on what information, the type of information that should be given to consumers, that is the members of the SACCOs. And the other section covered under this regulation is the prudential reporting, that is on how they're supposed to be reporting their financial status in terms of the financial reports. The other law is on the Income Tax Act, Cap 470, and this details on how SACCOs should be taxed. And it will give outlines on the exemptions and also give details on what should be taxed and what should not be taxed in SACCOs. Now, on to the main topic of the day, that is the SACCOs that are applicable to SACCOs. We are going to begin with the corporation income tax. And as we have seen, taxation of SACCOs is usually covered by the Income Tax Act, Cap 470, and to be specific, that will be in section 19A. So under the Income Tax Act, the taxation already recognizes 3 groups of cooperative society. Just as we have seen, we have the 3 structures of cooperative society. The same applies here. Although with the taxation, you'll find that some of these structures have been combined into one, while others have been split into 2. So one of the groups that is recognized under the income tax is the designated cooperative societies other than designated primary society. So what we mean by designated cooperative society, this is a cooperative society that has been registered under the Cooperative Societies Act. So with number 1, we have the designated cooperative society other than the designated primary society. So according to our structure, this will narrow down to the apex and the secondary societies. Then number 2 is the designated primary societies other than SACCOs. So this will narrow down to the primary societies without the SACCOs. That is based on the structure that we had previously covered in our last slide. Then the other group of cooperative societies is the SACCO. Now, the 3 groups of cooperative societies do not include 1, the society exempted from all provisions under Section 92 of the cooperative societies, and also the societies that the commissioner considered to be corporation operating for profit. So what happens with this is that you'll find that we have organizations that began as cooperative societies, but with time they cease being cooperative societies because their agenda switched from benefiting the members, and now maybe they begin making profit for the benefit of first benefiting the investors and also other shareholders other than the members of that society. Now, in this section, we are going to see how SACCOs make their income. And SACCOs generate their income through number 1, the interest for member loans. For those that are in SACCOs, they might understand that what happens with members of a SACCO is that once you are given a loan, you are supposed to pay back the loan with an interest, which is an income to the SACCO. The other source of income for the SACCOs is the interest income from third parties. So what happens with this is that once you deposit your money in SACCOs, they invest that money in other organizations such as the bank, the insurance companies, or even other financial institutions. And return, this organization pay back SACCOs interest income. The other source of income for SACCO is the rental income. This is for SACCOs that have rental property, and they rent out these properties, and in return, they receive some rental payment at the end of each month or even a given period of time. The other source of income is the royalty income. And then we have the investment income in terms of the dividend, the interest, or even other gains that should be charged to tax. Now, we have seen the sources of income for SACCOs, and we wish to introduce the concept of mutuality concept, whereby this refers to the idea that SACCOs own, they operate, and use their members' deposits to benefit themselves. So what means is that the members are the savers, they are the people that save, and the members are also the people who take the loan. So we can say that they are the owners and they are also the lenders. They are the savers and they are the lenders. So with this concept, what happens is that members pool their resources together, that is the savings. So they put their savings together and then use this fund to provide loans and other financial services to themselves, that is the members. So ideally, they are the savers and they are the members. Now, due to this concept, interest on member loans is usually fully tax exempted, meaning that they do not have to declare any interest on member loans when they are filing their annual returns. And due to this concept, any operating expenses incurred to earn the interest on member loans is also exempted from tax, meaning that it is not an allowable deduction when you're filing your annual returns. So we have seen that the only exempted income when it comes to SACCOs is the member interest, the interest on member loan. So there are all the other sources of income for SACCOs are chargeable to tax. So a good example would be the rental income, which is usually taxed at 100% after deducting the allowable expenses. A good example would be if a SACCO receives rental income of 100,000 shillings, they're supposed to deduct the allowable expenses such as the insurance for the building, let's say the agent fee, or even the electricity or repair cost. And then once they get the net of that amount, they're supposed to declare the total of that amount when filing their annual returns. Let's say the total of the allowable expenses is 20,000. So you're going to take the 100,000, deduct the 20,000, and then the balance of 80,000 should be declared when you're filing your annual returns. The next source of income that should be subjected to tax is the interest from banks and other financial institutions. As we have seen, the deposits that you make in SACCOs are usually invested in other third-party institutions, such as banks. So once these banks pay the SACCOs interest, they are only supposed to declare 50% of that income that they get from those banks or the other financial institution. So the same example applies if the banks, let's say Cooperative Bank has paid SACCO 100,000 as interest on their deposits, the SACCO will take only 50% of that, which is 50,000, and declare it when filing its annual returns. The other income is the dividend income. If it's from companies, SACCOs do not have to declare that amount, because when a company is giving SACCO or paying back its dividend, the company usually withhold 5% of that amount that ought to be paid to the SACCO. And that withholding tax is final, meaning that the SACCO does not have to declare the same amount when filing its annual returns. Then if it's dividend income from other cooperative societies other than SACCOs, this amount should be declared when filing the annual returns, because once a cooperative society is giving a SACCO back its dividend, there is a 5% withholding tax that is not usually final, meaning that at the end of each year, the SACCO should declare that whole amount, which is 100% of that amount, in their annual returns. Then for other types of incomes for the SACCOs, you are supposed to declare it, the whole amount of that income for filing the annual returns. We are done with the corporation income tax. The next type of tax is the pay and other statutory. The pay is the pay as you earn. So the pay as you earn is a mandatory monthly tax deduction from employee salaries. And what happens is that the employer is supposed to remit this amount to KRA on behalf of the employees. With payee is only subjected to employees who earn above 24,000 per month. So if you are below 24,000 shillings, no pay is deducted. With payee, the employer is supposed to file and remit the dues of the payee by the 9th of the following month. So for example, the payee for last month, that is March, should have been paid by the 9th of this month, that is 9th of April 2025. Alongside the payee, employers are also supposed to be paying other statutory deductions. Number one, we have the NSSF, that is the Social Security contribution. This is at 6% of the pensionable earning, where the employee contributes 6% of the pensionable earning, and the employer matches the same. This amount is capped at 4,320 for each party, meaning that the employee will contribute 4,320, and the employer will also match the same amount. The other type of statutory deduction that SACCOs should pay is the SHIF. This is the one that took effect after NHIF was scrapped, and that is in October last year. And the employee contributes 2.75 of the gross salary. The other type of statutory deduction is the affordable housing levy. This was introduced last year in March, and the employee contributes 1.5 of the gross salary. On to the next type of tax that SACCOs should be remitting is the withholding tax. This is tax that is deducted from the pay that you give to your suppliers. So let's say if you have an accountant that you have outsourced and you are paying them 20,000, you're supposed to withhold 5% of that amount when paying them. So a good example of the withholding tax applicable to SACCOs is on professional fee. So with this, if you have an accountant who is a resident and a SACCO has given that accountant some work to do, once they are about to pay them, they are supposed to withhold 5% of that gross pay and remit to KRA. And if it's for the non-resident, the 20% rate will apply. Please note that for the withholding taxes, you only charge if the pay is above 24,000, meaning that if in the case of the accountant under the professional fee and let's say 22,000, that person, the SACCO should not withhold any amount on that pay. The other one is on commission. So if the SACCO is paying its salespeople a commission, they ought to withhold 5% of the gross pay. Then interest to the non-members. If the SACCO is giving interest to non-members, they ought to withhold 15% of the gross pay. That is the total amount that they should pay the non-members. Then the other one is the dividend to members. Once the SACCO is giving dividends to its members at the end of the year, they should withhold 5% of the total dividend payable to the members. So with withholding taxes, the SACCOs must file and remit within the 5 working days after paying or deducting, whichever comes earlier. So that means that one thing to note is that this is the work within 5 working days and not just within 5 days. So it's 5 working days. That is Monday to Friday. The other type of tax is the value added tax, that is the VAT. Just like any other business, SACCOs should be filing VAT, but this is guided on the basis that they are supplying taxable goods that exceed 5 million in a year. And then they must also be selling vatable goods. Like, for example, if a SACCO is offering training services to the public, they need to register for VAT if they have reached the 5 million threshold. And also if they have the sale of goods, and also if they have rental income from commercial property. One thing to note here is that if the SACCOs have residential property and not commercial property, no VAT is payable. But in case of a commercial property, they ought to be paying VAT on that property or that rental income. So with VAT, the taxpayer is supposed to file and remit the dues by 20th of the following month. So let's say that, for example, the VAT for last month, that is March, should have been paid by 20th of April 2025. So with VAT, the penalty for late filing is 5% of the tax due, or 10,000, whichever is higher. And then if you are late to pay, there is a 5% on the tax due and an interest of 1% per month. The next type of tax is the rental income. The rental income tax. This is for SACCOs with rental properties. So with residential income, with residential rental income between 288,000 and 15 million per year, these attract a rental income tax called the monthly rental income, that is the MRI, at a rate of 7% of the gross rent received. And one thing to note with this is that no amount of expense is deducted from whatever is paid as the rental income for a certain period of time. What I mean by this is that if a SACCO receives rental income of 100,000, they are supposed to subject that to 7.5% without deducting any expense from that income. And with MRI, it must be filed monthly on or before the 20th of the following month. So the same case applies. If, for example, a SACCO had rental income last month, that is March, that amount was due by the 20th of April this year. That is 20th April 2025. And in case at any point in time, the SACCO does not receive any rental income in a given month, they ought to file nil returns. So they are not supposed to assume that since they don't have any rental income, no filing should be done. So in case you have no rental income for that month, you ought to file nil returns. For rental income below 288,000 and above 15 million per year, this amount is taxed while the company is filing its annual returns. That is together with other source of incomes. And that is at 30% for residents and 37.5% for the non-residents. The next type of tax is the capital gain tax, that is the CGT. CGT is a tax that is levied on the profit from the sale or transfer of property situated in Kenya, acquired on or before January 2015. So whenever you sell a property or transfer a property to another person, you ought to be paying this capital gain tax on the net gain from that property. So what happens is that for you to get the net gain, this will be the selling price minus the buying price. That is the amount that you spent on buying that property. So we take the CGT is usually at 15% on the net gain. As I've said, that is the selling price minus the buying price, and it is final tax, meaning that in this case, a SACCO does not have to declare this amount while filing its annual returns. The tax point for capital gain tax is when the property is registered. to the relevant body. Like in this case, if you transfer your land to another person, the point at which capital gain tax is due is when the land is registered to the Ministry of Lands. And one thing to note here is that this amount should be paid by the seller and not the buyer. So the person who is selling is liable to file and pay this tax. The other type of tax is the stamp duty. Stamp duty is a tax on legal documents related to property transaction, such as buying or selling. So whenever you are buying a property or selling a property, you ought to be paying a stamp duty on the legal documents for that property. I know we have different types of stamp duties, but in this case, we are mainly going to focus on the land stamp duty. So the rate for the stamp duty on land, it's 4% on the urban land and then 2% on the rural lands. On to the next tax item is the items. Most of us might be familiar with this items idea. So items is a KRA established electronic system through which a taxpayer is required to issue a tax invoice. So nowadays what happens is, whenever you're going to buy anything from a supplier, the supplier ought to issue you with an items invoice for you to be able to claim those expenses when you are filing your annual returns. With items, everybody is required to onboard on items. That is every person carrying business in Kenya. We, however, have some exemptions for items. Number one is the emoluments. This is the salaries that you pay to your employees. And this is an exemption because KRA already has this information through the payee that you file on a monthly basis. Then we have the imports. This is an exemption because the same thing applies here. KRA already has this information because at the entry point, at the point of entry, that is where your imports are entering into Kenya, your information and your payments are usually processed using the custom management system, and that is usually under the KRA. The other exemption is the investment allowance. Then we have the airline passengers ticketing, and then the interest. And this is the interest that SACCOs pay to members. That amount is exempted for items invoices. Now, with items, we have different types of solutions for different types of users. We are going to go through each one of them, and maybe you can categorize yourself under which type of solution you fall under. That is, what type of solution your business fall under. Number one is the pay point, the windows. This is for taxpayers selling goods at a single location with a single pay point. And with this, you're also able to track your stock through the same items solution. The other one is the multi-payment, Windows-based. And this is for taxpayers selling goods having multiple locations with more than one pay point. And it also have the same stock module whereby you're able to track your inventory. So with the pay point, that is for a single location and a single pay point. And then the multiple payment, it's a multiple location with multiple pay points. Then we have the pay point items. This is for the Android versions and Android version tablets. And it also has a stock module. So that means that you can issue items invoices on your tablets. And the Android version must be above the version 8. The other solution is the online portal items. This is for taxpayers in service sector only. So in case you are selling goods, this category cannot help you in generating the items invoice. For the online portal items, it does not have a stock module because ideally the service sector has no stock to track. Then we have the virtual sales control unit and the online sales control unit. So this one provides system-to-system integration with the taxpayers' billing system. A good example would be the one that we find in supermarkets. The other solution is the eTeams Lite web. And this is for businesses with minimal transactions, and you can access it on eCitizen. Then the last type of eTeams solution is the eTeams Lite USSD. So you access this through the *222 hash, and it is mainly for individuals and sole proprietors. So the different types of eTeams solution are there to ensure that all types of businesses have a solution to enable them generate eTeams approved invoices. Since the introduction of eTeams, we have seen a number of enhancements on the system. And one of the enhancements that we have seen is the reverse invoicing. So what used to happen previously is that only the seller would issue you with an invoice, that is an eTeams invoice. But nowadays, in case a seller is not able to generate an eTeams invoice, you as the buyer can go ahead and issue a reverse invoice. That is, you issue the eTeams invoice on behalf of the seller. Then we also have the self-onboarding. So nowadays, we don't need KRA intervention. So the only thing that you need to do is apply, and then you'll apply to onboard on eTeams, and then you'll get an instant message on the approval of that application. The other enhancement is that taxpayers can use different eTeams solutions to invoice simultaneously. So what this means is that, for example, if you have using the eTeams Lite web, that is on the eCitizen, you can issue an invoice there, that is invoice 1, and then issue another invoice in eTeams Lite. That is for the same business. So if you have a business, you can issue different invoices using different eTeams solutions. So that means that you don't need one eTeams solution to issue the eTeams invoices. But one thing to note with the simultaneous invoicing of using the different eTeams solution is that if you raise an invoice using the eTeams Lite, you need to raise a credit note on the same, that is on the same invoice, you ought to use the same eTeams solution. That means that if you had raised an eTeams using the eTeams Lite web, you cannot issue a credit note using now the eTeams Lite USSD. You have to use the same eTeams solution to complete your transaction. Be it you issue the invoice and then you issue the credit note on the same eTeams solution. Now, as we come to the end of our discussion on the taxation of SACCOs, this is a general tax reminder on the tax amnesty that has been running and will be there up to 30th June 2020, that is 2025. This is for those people who had outstanding tax obligation by 31st December 2023. So in case you had any tax arrears by 31st December 2023, and you had cleared your principal tax, the waiver on the penalties and interest will be automatic in that case. But in case you had any tax arrears by 31st December 2023, that is on the principal, you will have to apply on iTax and commit on how you are going to settle that outstanding tax by 30th June 2025. So this is just to encourage those that had unpaid taxes to liaise with KRA, that is on iTax, apply for you to have the penalties and interest waived. So this will ensure that you are able to reduce your tax liabilities and also ensure that your books are okay in terms of tax compliance. So thank you all. This marks the end of our discussion on the taxation of SACCOs. And I wish to take it back to Frida.
Thank you so much, Beatrice, for the wonderful presentation. I can see we have a few questions in the chat box, and we will go straight into them. We have a question from Aris Mwangi. She's requesting for an elaboration on loyalty and investment ways of generating income for SACCOs. Maybe John or Beatrice, one of you can answer that. And then we have another one from Anne Wezesha. Does it mean withholding tax does not apply to interest to members? And what are the penalties for late payment and filing of the other taxes other than VAT? Maybe you can first answer those two questions as we move on to the next questions.
Thank you, Frida, and every person who has taken time to be part of this conversation. I'm John. I work with Beatrice in tax advisory. So there are questions that we can see here. I'll begin with a comment from David Mweru. He says, recently I was in KRA and they say nowadays you can use online portal to raise invoices when dealing with goods. Yes, that is a welcome development. You realize that KRA has had to really work on improving the eTIMS platform to accommodate the dynamics of various businesses. Just like Beatrice has said, previously you couldn't use multiple platforms or multiple solutions in regards to eTIMS. But nowadays, you can be able to juggle between the available solutions. The only disclaimer is that if you need to generate a credit note, you need to cancel a certain invoice or a certain transaction, you will need to use the initial solution that you used to generate that invoice. So those are just some of the changes that they've made. So I agree with David that KRA is really trying to work around to see that it accommodates more people based on the dynamics of their businesses. The other one is from Anna Wezesha. Does it mean withholding tax does not apply to interest to members? So, like Beatrice had mentioned, interest to members is not taxable. Just like the mutuality concept that Beatrice had explained. So this income is not taxable, and as such, the SACCOs are not supposed to withhold tax on those incomes. The other bit is on the penalties for late payment and filing of the other taxes other than the VAT. So penalties for late payment, they apply just as they are provided for in the Tax Procedures Act. So if it's the payee, there are the penalties that have been provided by the Tax Procedures Act when you delay in first filing and then maybe remitting. So you may need to check out the specific penalties based on your tax obligation. Alice Mwangi asks, kind of elaborate more on loyalty and investment ways of generating income for SACCOs. For example, investment can be, for example, they may have, SACCOs may have investments in buildings, for example, or commercial properties that they have designated them as properties to earn their income. So those are some of the that is just an example of one source of the investment income. Royalties is broad and it depends. So if they are earning some incomes from royalties, say their name, sometimes SACCOs, they can franchise their brand, and somebody else can use the SACCO's brand to maybe perpetuate an agenda as per the agreement with the SACCO. So if they earn any royalties from that, that will be taxable, as Beatrice had explained. I'm looking at any other question. David Mweru is asking which online portal. I'm not sure I'm getting the question. Maybe you can make the question clearer, David, please. You had also asked about the investment allowance for residential property. Of course, this I think this goes to, if, for example, SACCOs, they own residential properties that they rent out, and maybe they have, based on the threshold that Beatrice had presented to us, the 288,000 to 15 million income annually. If the incomes, they fall below the 288K or above 15 million in a year, it means those incomes will be declared in their annual incomes instead of the MRI, the monthly rental incomes. And it means when they are preparing now the returns, like right now we are doing the returns for 2024, they can claim the IBD, the investment allowances on those that property based on the rates that are provided by the law. So I believe I have answered the questions that have been asked, but maybe David can clarify on his question on the online portal. Thank you. Rita, maybe you can take it up.
Thank you so much, John. I can't see any other question in the chat section area. So if you have any other question, please feel free to type it on the chat box, and then our tax consultant will help you address the questions. As we progress, I would like to invite us to our upcoming tax masterclass. It will be a 5 days series held on Zoom. That is from 9th to 13th June 2025. The classes will be running from 7:30 p.m. to 9:30 p.m. What we will cover in the classes, iTax, that is payee, VAT, withholding tax, so the attendees will get a better understanding on how to go about iTax, and also the other statutory deductions such as NSSF, SHA, Affordable Housing Levy, NITA, and the NITA levy. And the training is charged. You will be required to pay 5,000 shillings to our account. And for you to register, there's a code that you're required to scan. You can watch out on our social media platforms. More details on the same will be made. Thank you so much. At this juncture, I would like to make a presentation of who John Daniel and Partners LLP is and what we deal with. So we are John Daniel and Partners LLP. We are certified public accountants. We are based in Nairobi, Nana House. Nana House is in Kimathi Street, opposite Nation Center. And we believe in teamwork, integrity, and excellence as a team. And we are here to empower you to run your business. As a team of professionals, we believe that it is good if you leave the professional bit to us so that we can help you handle it, like bookkeeping, accounting, tax advisory, management advisory, both internal and external audits. Allow a team of professionals to do that for you as you concentrate on other affairs of your business. So if in case you have any issues on those areas and you need to engage the services of a professional, please consider John Daniel and Partners LLP. We are ready to help you drive in your business. These are some of the services that we offer: bookkeeping, accounting, just as I had mentioned previously. And our team is all-rounded, multi-talented, and we are CPA finalists. So feel free to contact us. We are all Zero certified advisors. We use the Zero accounting software. It's a cloud-based accounting software that helps us to handle your businesses. If you want us to use another accounting software, our team can also use other available softwares like QuickBooks, and we will be able to engage you. These are some of the clients that we have served, and the clients are diverse. Some of them are in the real estate industry, others are in the consulting industry, others are NGOs, manufacturing industries. We have also worked with the government, so feel free to engage us. These are some of our key partners. We have partnered with Zero, so we are Zero certified advisors. We have also partnered with WorkPay and UpeoSoft ERP. So what next? When we engage you, we contract you, and we get to understand your needs. And this is a relationship-based interaction. First, we have to understand your key pain points, and then we can discuss on ways we can explore to help you run your organization better. So thank you so much for your time and attending our webinar. We normally have these free webinars on monthly basis, so watch out for our next webinar that will be happening towards the end of May. Thank you so much for attending this webinar. The presentation slides will be shared in your emails. Yeah.
Frida, just before we sign out, I think I have realized I made a mistake in reading the question on online portal. It was from Wangoi, not from David. Sorry for that. And I think what Wangoi was asking is if, okay, she was asking, she was seeking to understand which online portal. There is an online portal in eTeams, mostly for, originally it was mostly for services. You can log into eTeams and then online. Then you'll be able to access the portal. The other way is to access through your eCitizen platform. And from there now you can be able to sign up and proceed to generate your invoice. But someone else called Fadaro Shaban is asking if we hold career talks. We are really considering that, especially on the people or students or even people seeking internship, just to understand further most of these topics that we've been addressing in our webinars, and maybe help them also make a decision on what they want to pursue. Yes, David is also asking about transfer pricing classes. I would say that is one item that is also in our pipeline. So be in the lookout in our posters. I believe after the master classes that we have scheduled to conduct, transfer pricing classes will be next. So thank you so much all for your participation and for you taking time to be part of this conversation. Thank you.
Thank you so much, John. Thank you, Beatrice, for the wonderful presentation, and everyone for taking time to attend our webinar. We really appreciate you, and we appreciate your time. And the presentation will be shared in your email. Feel free to leave.
This is brought to you by John Daniel and Partners LLP.